Now I'm going to start with a trading tip before today's daily brief. I'll take a look at SPY yesterday. Probably one of the harder days to trade, and that's because SPY didn't have a clear direction. It was chopping, especially in the midday onwards. We were literally chopping for less than 1.5 points for the final 4 hours of the trading day. And that means there were only about 3 hours of meaningful trading right at the beginning. Now, apart from market context, where we understood that there could be chopping because we were prepared for possible buying and selling channels to be present, especially at the top of the range before a catalyst day. But there's a simpler way to look at this now. Now, when you understand what SPY is mostly made up of, it can help you. It's not a sure way, but it can help you sometimes in making your decisions. These are SPY's top 10 holdings as of 30th June. According to Investopedia, and you can see that Apple is one of the biggest constituents of SPY, 6.6%. So sometimes it's important to pay attention to Apple. As you can see, Apple yesterday, if I were to switch VWAP on, and you noticed that Apple has always been on the upward trajectory and way above VWAP. This is the 30-minute. If I were to switch to the 5-minute of VWAP, although I'm not a fan of using it to enter trades, it's a very good sentiment indicator. If you're trading above VWAP and not even close to testing it, right? We hardly tested it throughout the day for Apple. If you're playing puts for SPY, you just have to be extremely careful. I would take quick profits if I could, if I were playing puts, and not be hoping for a big reversal. You can add on contracts later if it's a huge dump, especially if Apple crosses below the VWAP, especially with such a large gap on top. So that's one tip you can have. So that's one obvious way yesterday that we have, and that's what's keeping SPY up as well, especially after this, right? We got protected here at the double bottom. Now, if you realize SPY has been on this buying channel that we've charted since probably a week ago. It's not brought out of that buying channel yet, right at the opening of yellow and the buying channel, and after which we had a rejection at the top of the buying channel, brought back again, once again yellow. This was the double bottom, and also off the buying channel again, and stuck to the buying channel at the end. And here's another tip that you have to remember, that if you see a buying channel like this, this is where the big money is systematically buying. Now you have to remember, this is a macro buying channel, that within this macro buying channel, there are also micro selling channels. As you can see, we charted it. There are some selling channels the day before and also yesterday, but it didn't last long because the macro buying channel took over. So these channels, they are algorithms, right? They are systematic buying. Big money is just planning the systematic buying. So as a day trader, if you're swimming, this is the current, don't swim against it, right? If you're swimming against it, you have to be very careful. Now, if you're swimming against it, you take puts when there are reversal structures near to the top of the channels, right? For instance, right here, this is the top of the channel. This is where you can commit to larger contracts of puts because you will get good risk reward. And this is predicated by the fact that we have been following a smaller, narrower channel from there. So breaking this will actually give you a greater risk reward. Now, comparably to this, if you see this channel right here, you know you can be safe to take some puts here. If there are some reversal structure, instead of waiting for it to go here. So channels can be quite relative. You have to identify them and know how to use them. For example, this, right? That's not breaking of the channel. So maybe puts here, it's also a possible play, right, all the way to the end here. Right, so we managed to also get maybe 2 points move that day. I remember this day, right, as well here at the top of the channel, right here. It's a possible 3-point move down. That was yesterday. So it's also a possible play. So if we are in the middle of the range, you have to be very careful. So when you understand macro channels like this, you therefore know how to look out for micro channels and be taking your trades and knowing how far your trades can go, and be realistic in leaving your runners and taking decisive profits. Now, tip number 3. Now, sometimes the SPY structure is really ugly. Yesterday's SPY structure was really ugly. So this is why we depend on stocks like Qs, the QQQ, that makes up about 40% of SPY to help us sometimes in providing clearer structure. At this point in time yesterday, about 10 to 11 a.m. Now, if you look at the Qs carefully, right here, you notice that the Qs started forming a head and a very clear right and left shoulder right here. Right, we saw that there is this clear right and left shoulder here. Let me zoom this in. Right, so we formed the head here, and we formed the right shoulder here, and we formed the left shoulder. That was confirmed with 2 rejection wicks of that left shoulder. Now we have that support neckline here. Now, right here, you would have taken puts because you saw weakness in that the high of day was not tested again, and we had a very strong rejection wicks of this right shoulder. So this would have been a good few points. It's a good few $100 profit for just taking a couple, maybe 4 contracts. So you see the Qs provided some clarity on the structure. Now, comparably with SPY, SPY structure was a little bit more lopsided, a little uglier. You see the head forming, but the shoulder is a little lopsided. It's a little out of place. So it's not that easy to take a trade here. However, the SPY does provide another structure, and that is the breaking of this buying channel. So if you observed this breaking of the buying channel, especially after indecision doji, and thereafter a slightly weaker doji that broke out of the channel, now you notice that this is a confirmation to get puts. You wait for the Qs, you notice that they have this structure as well, forming a head and shoulder to retest this, and this will be a confirmation, right? If they broke through this neckline and pushes it way down, there's a pullback, you can add more contracts when Qs does this, because that's when SPY started to dump, right? But otherwise, you wouldn't have that much confidence if SPY tested here and we could not break through this neckline. So sometimes we use the Qs to help us to determine a clearer structure for SPY. Now, another example yesterday, right here, this short little push-up here. I noticed SPY was a straight push-up, really straight. But if you see the Qs, you notice something really special, right? You notice that the wicks provided some sort of curvature here. Now remember this. This is just tapering of buying channels, right? The buying channels like that. This is number 1. But it started tapering off. Number 2. Started tapering off. Number 3. And it became flat before it became a selling channel, right? So this reduction in gradient in the buying channels is where we start forming cups. And that's when you know it's a basing maneuver. You probably can see a reversal coming. Now look at the Qs. It's a little bit more obvious than the SPY, which is just one straight up. So if you could see this, you would identify that a reversal will probably happen right here. And this is where you can probably take some puts. Right, you take some puts, but how far can it go? Not far. Right, for SPY as well, it didn't pass by orange. Orange was a very difficult support level yesterday to pass through. So this is also where you see other constituents like Apple, which I explained earlier. Right, so you be very careful with puts in that case. Right, so In this case, well, that's still a good 1.5 point, especially in midday. This was probably the best trade to take in midday. That's it. And the last 4 hours of the day was just chop, right? So this was probably the only trade to take in midday. Thereafter, everything was just a chop, right? So sometimes use the Qs, right? Use the constituents of SPY. Now the Qs are, remember, 40% about there. SPY, so this affects SPY a lot more than Apple. Now Apple's only 6%, it's not much. But it gives you some sort of indication on what not to do instead of what to do. Now in this case, if Apple is extremely strong, then you got to be careful when you're playing puts for SPY. Now remember, it tells you what not to do, but it shouldn't be telling you what to do. It's a little different there, right? Especially if it's only made up of 6% of SPY. Let's go to today. Now today we have the CPI report at 8:30 a.m. Eastern time. Nothing else we can do now, right? That's why we have to get prepared by then. Straddles, right? To be risk-free. That's what we have always been doing. That's what I've always been suggesting to do. Now, right now, we just need to know what are the headline figures to look out for. Now, when we look at the core CPI, there are two things we have to look at. First is CPI, and the second is the core CPI. Now, we're looking at headline numbers in this case. Now, last month, our CPI figures were at 8.5%, and core was at 5.9%. Now, this month, the expected is 8%. And the core slightly up at 6%. It's a large reduction. So the analysts are expecting a reduction today. So it's quite simple. Market is predicated by fear, especially when we have such a large push up for now, right? Just 4 straight green days with multiple gaps up. Now, as long as it's an extremely bad news, we will start pushing now. Now, don't forget what happened back then. This was probably a couple of months ago. Now, right here, this was fear. This was just fear. So what happened back then was that I think we were expecting 8.5 and we had a 9% headline figure and everything just went downhill. So you have to remember, fear is what will drive the market, not rationality. So in this case, in order for the market to hit down, we need fear, and that will push us down. Now remember, it's not the CPI per se that will be determining what the market should react. The CPI is supposed to lead us into the FOMC decision next week, where the market has already priced in 75 basis points. So regardless of the CPI report, 75 basis points is pretty much in the cards for the Feds. Now, the biggest problem that I think the market is worried about is that the Feds may front load something, maybe 1 basis point, especially if the market is in such good condition now, so they do not have to worry about a soft landing. So there are some sentiment dynamics at play before next week, and this is why we have to be extremely careful when we trade. It's not that easy to be predicting the market right now, because just probably a few months ago, the market trading ranges were determined by the basis points that the Feds were introducing. So remember, we had 50 basis points here and 75 basis points here if you were trading with us just a couple of months ago. But currently, the market is not like that. The market is worried about more than just interest rates hike now. It's also worried about recession, because there's very little clarity that is given by the Feds at this point. And so the market is not able to effectively price in based on the amount of basis points in. And it's a lot based on sentiment, you realize, right? This was a sentiment by Powell. Now, every large movement you see in the market is a sentiment by Powell. So we just have to be extremely careful when we trade. Just take your profits if you can and leave some runners. That's the best strategy you can have. So today, if you see anything above 8.5%, there's going to be initial fear that's going to push us down. So I will explain later at what point will the trading ranges be protecting the trades. But if you see anything above 8.5%, we are certainly going to be heading down with some correction. There will be some profit taking. There will be some fear that will come into the market. If we see anything below 8%, below, and you see 7 as a headline figure, 7.9 even, this is probably going to go up to 430 maybe. Right? We still have several beautiful gaps here. We have about a 2.5 gap here, another 2.5 point gap here. So we have 2 gaps that we could possibly fill by then. So that's also a possibility, and be careful because right now, remember, the CPI is not the main driver of the market now. The FOMC meeting is. This is just an indicator of what we think the FOMC is going to be like. So we can have a knee-jerk reaction if we get 7.9, for example, push all the way up, and there will be profit taking later because they will know, right? The big money will know that the Feds will anyway be introducing 75 basis points, maybe 100 basis points, and front load something, especially if the market is going up so high. So there's no danger of a market crash. So you see, that's the difficulty of the market dynamics now. So we just have to be extremely careful. But if you see 7 today, we are certainly heading up, even pre-market. Try to catch the way up in that case. I will explain the trading ranges later. So this is just my estimation right now of the trading ranges. Now we have 420 here. Now we do have 430 here, and 430 is made up of 2 gaps. Now it's the bulls incentive to want to close these 2 gaps as much as we can before any meaningful profit taking. Now we currently are bound here 410, 411. And we have another trading range here at about 401 right here, and another one below at about 390. Now, if we do get less than 8%, anything with a 7 headline number, 7.9 inclusive, now it's possible that we close these 2 gaps here. So we may push up all the way up. Maybe not just one day, maybe a couple of days, including tomorrow's PPI. It's a possibility we'll close this gap here. But as I remind you, CPI is not what will determine the market direction. It's the FOMC meeting. So it's possible also that if we push all the way up, and especially close these 2 gaps, the profit taking may ensue after. Now, if we do have a good figure, maybe between 8 to 8.5%, I would think 420, maybe we close one gap here at about 424. That's the possible top range that we have. Now, our existing zone here right now is between 410 and 401, between 411 and 401, this 10-point range here. So if there's indecision in the market, this is the best place to base it in, especially up to 401. So if we do have between 8.5%, maybe slightly higher, 8.6, 8.7%, then maybe we will start chopping in this area here. So don't expect too much fear in the market. But if we see anything above 9%, right, or even 8.8, I would think anywhere near 9, 8.8, 8.9 to 9%, now we will certainly see some fear bring us down below 401 trading range here. Now, all these are just for us to prepare for how the market is going to react. So when we prepare how the market is going to react, we are aware of which levels do we look out for places to take larger contracts and to look out for reversal microstructures. So this is the market context. Keep it in mind. And with this knowledge at the back of your head, you're prepared. When you go onto the trading floor, you'll be looking out for microstructures. And don't forget, today we are still in a buying channel. And if it's good news, we will continue this buying channel for sure. So just pay attention to this buying channel, especially when we close near the bottom of the bottom trend line. That's green. If it's good news, it'll be easy for us to take any calls from here, from the bottom trend line. However, if it's bad news, it's perfect time to break out of this buying channel too, isn't it? Right? Because we traded and chopped all the way from the top to the bottom of the trend line in a lateral fashion. Buying and selling channel. This tells you the market has no idea what will the CPI report be like. So there's profit taking and there's also buying at the same time. Buying and selling channels at the same time. So let's see what 8:30 a.m. entails. But once you are clear with the trading ranges, now you'll be slightly more careful to be calling for reversals and not to have unrealistic expectations and that the market will just go all the way. Now you must take clear, decisive profits. So in an event, for example, if we do push 10 points down, 10 points up, and that's a possibility on catalyst days, isn't it? Now you have to prepare at the back of your head how many runners you want to keep. Now, my suggestion, if you're taking 4 contracts, always leave 1 runner if you can, something that's break even so that it benefits all the way on a trend day. But it's not about catching the move. It's also about your time spent monitoring on the market. I would just take profits and go and enjoy my day sometimes, even though it's only halfway up the move. Sometimes your time is worth more than waiting out for the market to react. So always remember that. So prepare how to plan your trades, right? As I always mention, always ensure you protect your trade by taking partial profits so that it turns into a stress-free trading state. And once you are stress-free, you just leave the runner to do the work. And if it's a trend day, if it's a 10-point trend day, that's great. Go ahead. You will enjoy the trend. So 4 contracts, for example, you close 2 contracts for partial profits. In this case, you protect your trade. You leave 1 contract on a trailing stop. Now you can trail stop this with 0.3. I think this will be safe. Now this will eventually be stopped. So you can maybe do 0.25. Now most likely it will be stopped. This means that SPY cannot retrace more than half a point. So you have to remember what this means, right? If you do trailing stops of 0.3 and 0.25. So once SPY retraces by 0.5 points for SPY, you will get stopped. So keep that in mind. And you leave 1 contract as break even and you set alerts throughout the day. Now you expect this one to not give you any profits at all, but if it's a good 10-point trend day, you're going to get all 10 points from this. Especially useful on a catalyst day like today. So this will protect your trade. This will give you some of the profits. And this will give you the full profits if it is a trend day. Now scale accordingly. If you have 8 contracts, 80 contracts, 100 contracts, this is what you should be doing. Now if you're more advanced and you realize that taking 2 contracts to protect your trade is too much, now you can also break it down into different legs. Now there are advanced methods of protecting your trade and I will be discussing that next time. I've also taught you how to add on contracts. So instead of just opening 4 contracts here, for example, if we broke a buying channel, that's 1 confirmation, you add some more contracts, maybe 2 more contracts here, and it broke down the neckline, you add 2 more contracts here, take your profits from the earlier ones. So there are some trade management that you require, and this needs practice. At the end of the day, it's all about practicing when it comes to the intricacies of day trading. So what I suggested earlier, for example, with 4, take 2 to protect the trade, take 1 with a trailing stop, and 1 runner, especially on a catalyst day. Now this is just the basics of stress-free trading with struct. So you can modify this, and there are many ways of modification which I will teach in due time. So we're ready for later, and we shall see how the chart turns out. But don't forget, the main event is next week. The CPI report is only the lead up to that, so we have to also see how the market responds. The CPI report needs to be digested. There's a lot of intricacies inside the report, so the market may need time to digest that before making the actual move. So expect the knee-jerk reaction and then the actual move. So we just have to be very careful when we trade. Use the trading ranges as a way to protect you. So thank you very much for watching, and I'll see you closer to opening bell. Thank you very much.